Hello and welcome to another episode of Market Brief After Hours. Today was one of those days where the psychological milestones were front and center, but the staying power just wasn't quite there. We saw the S&P 500 briefly cross a massive threshold, only to pull back as reality and the Federal Reserve set in.
That's exactly right. It was a classic pause for breath kind of session. We had that historic moment where the S&P 500 touched the 7,000 level intraday, hitting a high of 7202, but it couldn't hold the line. The catalyst for the pullback was really the Federal Reserve. They kept a steady hand, signaling that rates are going to stay higher for longer. The market was looking for a dovish pivot, but instead they got a neutral stance and a message that the economy is expanding at a solid pace.
It seems like good economic news is bad market news again because it keeps yields high. Let's get straight into the numbers for the major U.S. indices. How did we finish the day?
It was a mixed bag, but mostly flat. Starting with the Dow Jones Industrial Average, it managed to eke out a tiny gain, adding about 12 points to close marginally higher at 49,016. It's up just 0.02%. Continuing that consolidation near record levels.
And the S&P?
The S&P 500, as we mentioned, retreated from that historic high. It slipped just a fraction, down 0.01%, to close at 6978. It was up earlier in the day, but that Fed messaging really took the wind out of the sails.
And what about the tech-heavy Nasdaq?
The Nasdaq Composite outperformed the others slightly, rising 0.17% to close at 23,857. There was definitely strength in semiconductors and data infrastructure. Seagate, for instance, surged 19% on earnings, but late-session weakness in some chip leaders kept a lid on the broader upside.
So tech is still holding things up, but barely. Now, looking beyond the U.S., it seems like the mood was decidedly more somber in Europe.
Absolutely. It was a sea of red across the Atlantic. The Stoxx 600 fell 0.75%, and every major bourse was in negative territory. If we look at the specific countries, the UK's FTSE 100 lost 0.52% to close at 10,154. In France, the CAC 40 dropped 0.81% to 8,087.
And Germany?
Germany's DAX eased 0.29% to 24,823. But the biggest loser was Switzerland's SMI, which tumbled 1.46% to 13,024. A lot of this was driven by earnings disappointments and weakness in the luxury sector. LVMH, for example, slumped nearly 8%, despite what looked like solid earnings on paper.
That is a significant drop for a luxury giant. Moving over to Asia, the picture was a bit more divergent, wasn't it?
Very much so. You had South Korea's Kospi having a record-breaking session, climbing 1.69% to 5,171, largely due to positive trade rhetoric from the U.S. Hong Kong was also strong, up over 2.5%. But then you have Indonesia, where the Jakarta Composite absolutely plummeted, dropping 8% after a warning from MSCI about a potential downgrade to frontier market status. So huge volatility depending on where you looked in Asia.
It's rare to see an 8% drop in an index like that in a single day. Let's pivot to commodities. We're seeing some intense movement in the energy and precious metals markets. What's driving oil?
Geopolitics is back in the driver's seat for oil. Brent crude climbed 1.42% to roughly $68.50 a barrel, and U.S. crude was up similarly to about $63.50. This is all about the risk premium returning. We had warnings from President Trump regarding Iran and confirmation of an increased U.S. military presence in the Middle East. That tension is pushing prices up after they had been consolidating.
And speaking of pushing prices up, we have to talk about gold and silver. These moves look parabolic.
Parabolic is the only word for it. Gold surged 3.70% to reach a staggering $5,372. To give you context on how stretched this is, the 50-day moving average is back at $4,413. We are trading nearly $1,000 above the 50-day average. It's intense momentum.
And silver?
Silver is even more aggressive. It gained 3.64% to close at $116.23. It's in completely new territory. Similar to gold, it is trading massively above its moving averages. The 50-day is at $71.96. When you see deviations this extreme, it signals incredible demand, but also a risk of exhaustion. But right now, the trend is vertical.
And before we take a break, just a quick check on Bitcoin.
Bitcoin is joining the party, up over 2% to $89,300. It's seeing its largest daily gain since mid-January.
The story there is institutional adoption. Over 60% of large U.S. banks are now offering Bitcoin services. It's becoming mainstream.
Incredible numbers all around. We're going to take a very short break. When we come back, we are going to dive deep into the Forex markets, specifically looking at those technical moving averages. And then we'll hit the biggest single stock movers of the day, including Tesla and IBM. Stay with us. Welcome back to Market Brief After Hours. We've covered the indices and commodities, but for our listeners who track the currency markets, there was plenty of action today. We saw some key technical levels being tested. Let's start with the euro against the dollar.
Right. So the Euro-USD pair faced a tough rejection. It closed down 0.77% at 1.1947. It tried to break above that 1.2000 psychological level, but sellers stepped in aggressively.
For the technical traders, where are the moving averages sitting right now?
Despite the drop, the broader uptrend is preserved because the price is still above all the key simple moving averages, or SMAs. The 50-day SMA is at 1.1689, the 100-day is at 1.1673, and the 200-day is at 1.1602. As long as we hold above these, the long-term trend is intact, but this pullback to 1.1947 suggests profit-taking.
What about the British pound?
GBP USD is consolidating. It's slipped about 0.34% to 1.3801. It's taking a breather after a multi-day rally. In terms of support, the moving averages are well below the current price, which is a bullish sign. The 50-day SMA is at 1.3392, the 100-day at 1.3375, and the 200-day at 1.3417. The structure still shows higher highs and higher lows, so the medium-term bias looks constructive.
And the Aussie dollar?
The Aussie is showing strength. AUD-USD rose 0.28% to 0.7030, extending its break above the 0.7000 handle. It is firmly above all its major averages. The 50-day is at 0.6663, the 100-day at 0.6610, and the 200-day at 0.6549. Momentum is clearly on the side of the bulls here.
Finally on Forex, the yen. We saw a sharp rebound there.
Yes, USD-JPY climbed 0.78% to 153.35, bouncing off 3-month lows. Technically, this was significant because the price moved back above the 100-day SMA, which is at 153.65, but traded above it during the session. However, it remains below the 50-day SMA at 156.41. The 200-day SMA at 149.75 is the major floor underpinning the broader trend.
Thanks for that deep dive. Now, let's shift gears to the corporate side. We had some massive names moving on earnings and news. Let's start with the EV giant, Tesla.
Tesla is always a headline maker. They topped quarterly estimates, which investors liked, sending shares up nearly 3% in extended trading to around 431. However, there was a red flag. They reported a 3% annual revenue drop. That is actually their first annual revenue decline on record. So a beat on the quarter, but a historic dip in annual growth.
Interesting dynamic there. And what about Big Blue, IBM?
IBM had a stellar day. The stock jumped 8% after beating fourth-quarter forecasts. They guided for over 5% revenue growth, which is solid for a legacy tech firm. Plus, they approved a 1.68 dividend. That marks 110 years of consecutive payouts. That reliability is exactly what investors were rewarding today.
On the flip side of tech, we had Meta and Microsoft.
Right. Meta gained over 6% after hours. The interesting thing here is that their Reality Labs division, the metaverse part of the business, posted a $6.02 billion operating loss. Total losses there are approaching $80 billion since 2020. But the core business is so strong that investors shrugged off the cash burn and pushed the stock higher.
And Microsoft?
Microsoft went the other direction. They fell nearly 5% in extended trading. They beat earnings and revenue expectations, but the market fixated on slowing cloud growth. When you are priced for perfection, any sign of slowing momentum in the cloud sector gets punished.
We also saw some drama with Carvana and Amphenol.
Carvana took a heavy hit, sliding more than 14%. This was due to Gotham City Research accusing the firm of overstating earnings through related party ties. Allegations like that always spook the market. And Amphenol sank over 12%. Despite a good quarter, their sales forecast was underwhelming, and Bloomberg Intelligence flagged that as a concern.
It really does feel like we are navigating a complex landscape right now. We have robust economic data clashing with a cautious Fed, AI optimism versus valuation concerns, and rising geopolitical heat.
That's the perfect summary.
The market is trying to figure out if the higher for longer rate environment will eventually break something, or if corporate resilience, especially in tech, can keep the rally going. As the S&P 500 hovers near that 7,000 milestone, all eyes are going to be on the transition of Fed leadership and, of course, the evolving situation in the Middle East.
Well, that is all we have time for today. A fascinating mix of record highs, sharp pullbacks, and technical battles in the currency markets. Thank you for breaking it all down. And thank you to our listeners for tuning in. If you find this useful, please follow Market Brief After Hours on your favorite podcast platform so you never miss an update. We'll catch you next time.